Hey, what's good, y'all? It's your boy Dylan back at it again with another video. And today, man, I'm gonna show y'all how to draw these supply and demand zones. A lot of traders don't draw them right, but today I'm gonna teach y'all how to draw them right so you can trade like a pro, so you won't be lost in the sauce. Because man, get this skill up the right way, you know. So let's get into it, man. So before I start, the charting platform I'm using, by the way, is called TradingView. I recommend you signing up for this platform. If you want to sign up, the link is in the description. Yeah, you won't be disappointed, man. This is like the best charting platform. I personally use this and Thinkorswim. I just wanted to mention that. But yeah, let's get into it. So first off, you want to go to your higher time frame. I personally watch the highest time frame I go to is the 4 hour because I'm a day trader. I sometimes glance at the daily, but you really don't need the daily is really not that beneficial for me, in my opinion, because it takes a day for the candle to form. So yeah, some might disagree, some disagree, but hey, it is what it is. I just do what works for me. So you're on your higher time frame. The highest time frame I go to is the 4 hour. That's why I'm on this. You want to identify your trend. So we're uptrending. You see this huge uptrend. We're uptrending. The market is constantly making higher highs. You see that? Higher highs and higher lows. We broke structure right here, which is interesting. So, but let me delete that. Where do y'all think in this area the zone would be? So, okay. What you want to do is you want to identify the chop. You want to identify the balance. So the pause. So we rallied up and we paused here. So for 4 hours, it was really for like about what's 4 times 3? 12 hours we balance right here. So but you want to focus on the first candle before the major move that left a gap. So this left a gap. So I would draw my zone right here. I would start at the top of this candle to the bottom and I would just drag it right. And you see, guys, you notice how we came in the zone, and ain't no telling what it did on this candle. So sometimes the candle doesn't. You got to go to the lower time frame to really see. Okay, it stayed below. Okay, so you see, once we got down here in the zone, we eventually found some buyers up here, but they failed. The sellers came in. So the institution. This is institutional activity right here. The market just bursted. Buyers and sellers didn't agree on price, and it formed an imbalance. Buyers won in this case, so it left an area where buying orders are right here, and they got filled, but it looks like they're not strong enough. But this is how you draw a demand zone. So we're on a higher time frame. This is also a demand zone right here. You see this balance, this basing period. Like I said, I like to draw mine from the gap, the start of the gap, the last candle from the start of the gap, and just draw on the 4 hour. This is another zone on the 4 hour. Basing. You see that? That's how you draw it. And then down here, I'm pretty sure it's some. I wouldn't count this. Yeah. I mean, this is a zone because it's basing. This is a zone, but it's not. I don't like it personally, but it is a zone though. But that's how you draw. You just identify the zones, man. That's all you do. This is a zone. You see? That gap, it left a gap. The market has to feel this. That's how I like my zones. So like it makes so much sense. But I'm gonna make a video on gaps. But this is how you draw demand zones. Okay, we're still on the 4 hour, and this is now a downtrend. You will want to be looking for supply zones. So you want to find where the start of the gap. You want to find the start of the gap. So this is a gap. You want to get the lowest point of the candle to the top point of the candle and just drag it right. Change the color for y'all so y'all don't get confused. It never got up here. Just drag it right. What's another zone? I don't like this. Okay. I like this zone. So you see the dump right here. See? This basing period, market agreed on price, and then it created an imbalance. It gave us two candles, two red candles. This was once a red candle, but it closed as a big wick. So it closed green, bullish. But this is considered a supply zone as well. So what you want to do is draw to the bottom of the candle to the top right here. Drag it right. Now look what happened. You see that? You see how it's following market structure? Major sell off. Got the orders being filled right here with the gap. They got filled. Market went that way, broke more structure. That's the idea of it. Oh man. Okay, deleting that. He even created another supply zone right here. Did it eventually tap? No, it didn't get tapped. Yeah, it didn't tap. This is also a supply zone too, right here. See that? Draw from the bottom to the top and go right with it. It got blown through though. I really don't like zones like that. You see how it didn't leave a gap? I need to make that video on the gap because I wish y'all would know what it is. But for those of y'all that don't understand gaps, y'all know what I'm talking about. This zone was once formed and price probably came down here and it came back up to tap the zone and then it went down. You see what I'm saying? That's what that's representing. So technically the zone has been touched. If you watch the first video, you know when the zone gets touched, the zone becomes weaker. You might get a rejection. We got a rejection at the zone, you see? We got a rejection from it, but price blown through because it was weak. I wouldn't take that zone because it's not fresh. You want to trade from fresh zones, but that's a zone though. Even this is a zone. It's just zones everywhere, man. Get the basing period. You see the gap. Get the bottom of the candle to the top of the candle. It's not rocket science. Wait for a test. And this is why I like draw. This is a prime example of why I like drawing the zones the way I do. Some people would take this wick. They'll even take this and draw it, but the zone is too big, bro. Like it's too, like who, what? But some people do that. We want to get the start of the gap. You see what I'm saying? Where the gap is, because look what happened. Yeah, it came down and rejected. It came up, didn't quite tap the gap. It left the gap unfilled and it rejected. Yeah, who cares? Well, look what happened once we entered the zone though. Once these orders got filled, it just tanked. Look how strong that is. But I'm pretty sure this is a news candle, by the way. So yeah, this is a supply zone. What else? And then market broke structure and now it's going up. And then it created a demand zone. Then we based right here again. We kind of based right here. We rally, based, rally. So this will be another demand zone. It got blown through though. It got invalidated, but it is a zone. What happened up here? Same thing. We based out. We held it. The market went up. And even this is a zone. Look at that base. You want the whole gap. It got blown. It got tested. Look, you see that? You see that? It got tested, but it got invalidated though. And it never came up here to tap this. Sometimes that happens. This is a liquidity grab, by the way. Sometimes that happens. And if you're experienced, you wouldn't know this. Like by the time this candle, like, you were to see this candle right here, that's just money, bro. Like you would know. You would just know. From my experienced traders, you just know. Look at that. You would know to take that to the next demand zone or this little resistance if you want to. I'm gonna make a video on how to draw resistance line, support and resistance. So that's actually a support zone, by the way, not a resistance. I don't know. I'm tripping. But yeah, you could have took it down here. But yeah, that's how you draw the zones, man. And this is on every time frame. You don't have to be on the 4 hour. The 4 hours are just stronger. Let me give you guys an example of why I say that. Okay, let me get zones that actually got respected. Okay, I found an example for y'all. This is an uptrend on a different instrument, but we're uptrending. So the overall direction is going up. We didn't break structure yet. So look what happened, man. Look at this. So we get the start of the move, the gap, draw your box to the right. This is what I mean by the higher time frame zones. We're on the 4 hour. The higher time frame zones are very powerful. They're stronger than any other time frame. The higher the time frame, the stronger. So look at this. You scale down, go to like the 15-minute, the 30-minute first to kind of see. Because when you go too low, it's like you gotta wait for some type of structure to be formed. Like you just don't want to get in at the touch. You don't want to get in right here. Like you want to wait for a break of structure or something. So in this case, I would have looked at the 15-minute. This is your entry time frame. So and waited for some type of structure break. So we broke this high right here, and I would have been looking for a retracement coming back into this demand zone. See what I tell y'all: supply and demand is on every time frame. And you want to trade along with it. So I would have had it at this low right here, and I would have got in on a 5-minute. I would have scaled down to the 5-minute from the 15, and boom, that's where I would have entered money, dude. Look at that, straight money. And I would have had me personally, I would have gave it some room. So I would have had my stop loss right here at the low. But look at the risk to reward you would have got if you would have held it. I believe it was a 4 hour supply zone too. Look at that. Back to the 4 hour. Look at that. Look at that gap. It doesn't get any better than this, man. Look at that. Draw your supply zone. Look at that. Beautiful. Look how strong it is versus the 5-minute. Now you could use the 5-minute to scalp. I do it all the time. But look at that. The higher time frame though, going with the overall trend. Look at the risk to reward you would have got. Look at that. These don't come often, but they do come. Look at that. You would have got a 5.44 R on that. And if you didn't want to have your stop loss right there, you could have just had it right here. But since we're high, I know how price likes to play around. So I would have had mine right here personally. But some people would. They do this. So that's a 10 R. You know what I'm saying? You would have got in at the perfect time. So look at that. A 10 R. This is why we like higher time frame zones. Because they're so strong. But in the midst of this, like look, this is what we mean by is like supply and demand is on every time frame. Before I say that, imagine risking only $100 to make what was the R? Me personally, just $100 to make 5 times that. Look at that. That's like $600, bro. You know what I'm saying? Like Bro, it just doesn't get that's a 6 hour trade. Come on now. You see on a 5 minute structure is just constantly being broken. We broke structure right here. We came back retrace. If you miss this, it also gave one right here. This is kind of lower probability, but it gave it's a zone. Look at that. Rejected off. Me personally, I would have got in like right here since it and I would have my stop loss right here below the box. And I would have traded to the next high. I would have got out 1 to 1. I would have got out like right here, closed partials and just kept it running. But you see, there's demand as it's going up. Here's another demand zone that got respected. Even supply, it even formed supply. Look at that. 2 candle rejection. That's the origin of the move. Supply, but you want to go with the trend though. Look at that. Just can't make it up. And I wouldn't have took these. These are zones, but they got invalidated. But look, it just kept going higher. Kept going higher. And then none of the zones, it never came back to any of the zones because it was zones all over here, man. Look at that. None of the zones, the price never came back. Like it probably came back. Yeah, it came back over here, but oh, invalidated. Oh, this one was respected. So you see, this is why you want to go with the trend. So since we're uptrending, I wouldn't be trying to. By the time we broke all this structure up here, like I wouldn't be trying to get in on this demand because I'm going against the rocket. Like I'm going against the falling plane. I'm gonna just say that the falling plane. I'm going against it, bro. Like I don't want to go against a falling plane. Who wants to do that? By the time it got here, I would have been drawing supply zones. Look at that. Go along with the trend. We're wave riders. Don't go against the wave. Here we go. Another one. DJ Khaled. Another one. Look at that. That one got respected. Boom. Trading opportunity. Boom. Got your candle. Break of the candle. Boom. Stop loss right there. Target the next demand or your whatever. It's up to you. But I would have targeted the next demand for sure. Cause this downtrend is so strong. That's why I would have done that. Target next demand. It's just trades everywhere. So, but now you get the gist, man. Like the higher the time frame, the stronger the zone, the longer the price swings are. That's why we love the supply and demand on the higher time frame. But hey man, I'm done for this lesson. I'm gonna be making plenty of videos of supply and demand because that's my strategy. So I'm gonna preach supply and demand, supply and demand, supply and demand. That is my bread and butter. But guys, if y'all like the video, please like and subscribe. I also have a Discord. I trade daily. I have weekly lives on there and I have lessons. Hope you like the video. I'm out.